Hey there, financial explorers, and welcome back to the channel where we demystify the complex world of hard-to-borrow stocks and short squeezes. Today, we're diving deep into a fascinating microcap that has appeared on our screener due to an exceptionally high cost to borrow, BJDX. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Alright, let's talk about BJDX. This microcap stock, with its incredibly tight float, has caught our attention because of one truly staggering number: an annualized cost to borrow fee currently sitting at an eye-watering 745.4%. That's right, almost 750%. Show BJDX ticker and CTB number. Now, before we get too excited, it's crucial to look at the full picture. Recent price action for BJDX shows a plus 0.0% change today, plus 0.0% over the last 5 days, and plus 0.0% over the last 30 days. And here's another critical data point: today's volume is 0 shares, with the 30-day average volume also at 0 shares. This tells us there's virtually no current trading activity, which is a key consideration when we talk about squeeze potential. What is cost to borrow and why it matters? So, what exactly is this cost to borrow we keep mentioning, and why does a number like 745.4% send ripples through the short squeeze community? In simple terms, when someone wants to short a stock, they first need to borrow shares from a broker. The cost to borrow, or CTB, is the annualized fee that short sellers pay to keep those borrowed shares. Show animation of short sell process. It's essentially the interest rate on their loan of shares. When a stock is hard to borrow, it means there's high demand from short sellers to borrow those shares, or the supply of available shares to lend is extremely scarce. This scarcity and high demand drive the CTB fee sky high, sometimes well over 100%, like we see with BJDX, because lenders can charge a premium. For short sellers, a high CTB means their conviction has to be incredibly strong to justify the ongoing expense of maintaining their position. Why this stock is hard to borrow right now? Now, let's zoom back in on BJDX. That 745.4% annualized cost to borrow isn't just a number, it tells a story. Highlight CTB. It suggests that the few shares of BJDX available for lending are in extremely high demand from those looking to bet against the stock. A major contributing factor here is BJDX's estimated float, which is incredibly small at just 0.9 million shares. Sheer float size. A tiny float means there are very few shares freely traded in the market. When you combine high demand to short with such a limited supply of shares, the cost to borrow can explode, creating significant pressure on short sellers. We currently don't have information on the exact number of shares available to borrow, but the CTB itself indicates extreme scarcity. Our internal composite squeeze score for BJDX currently stands at 40.5 out of 100. While this isn't the highest score we see, that massive CTB is a powerful component, indicating significant underlying pressure on short positions if trading activity were to pick up. Squeeze mechanics explained. So, how does a high cost to borrow tie into a short squeeze? Show explainer graphic. A short squeeze happens when a stock's price rises sharply, forcing short sellers to buy back shares to limit their losses. This buying activity further pushes the price up, creating a feedback loop where more short sellers are forced to cover, accelerating the price ascent. With BJDX, if the stock price were to stop moving upwards, or if the supply of borrowable shares tightened even further, that 745.4% CTB would become a massive daily burden for short sellers. The sheer cost of holding their short position could compel them to cover, regardless of their original bearish thesis, igniting a squeeze. However, it's crucial to understand that a high CTB does not guarantee a squeeze. It can also signify that short sellers have incredibly strong conviction in their bearish outlook for BJDX and are willing to pay a premium to maintain those positions. Dilution risk check. One critical factor to consider when evaluating any potential short squeeze candidate is dilution risk. Dilution occurs when a company issues new shares, which increases the total number of shares outstanding and can reduce the value of existing shares. Show graphic of dilution. For BJDX, our analysis found no recent diluted SEC filings such as -1, -3, or 424B in the last 90 days. This is a positive sign for any short squeeze thesis because new share issuances can provide an ample supply of shares for short sellers to cover their positions, offsetting or even negating the upward price pressure that a squeeze relies on. Without recent dilution, the current float remains tight, which is a core component of BJDX's hard-to-borrow status. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given BJDX's unique situation at colossal 745.4% CTB, the incredibly small 0.9 million share estimated float, and the current zero trading volume, what should we be watching for? First and foremost, volume. Without trading volume, there's no actual price discovery or pressure to cover. We need to see a sudden and sustained influx of buying volume. Highlight volume on chart. If trading activity does resume, and buying pressure begins to build, the existing short positions in BJDX would immediately face enormous pressure from that escalating CTB. Any significant change in the number of shares available to borrow, if that data becomes available, would also be a critical indicator. Keep a close eye on any price movement, as even a small upward trend could trigger a domino effect for those paying hundreds of percent annually to stay short. BJDX presents a fascinating case study in the world of hard-to-borrow stocks. The combination of its micro-cap status, extremely tight float, and that truly exceptional 745.4% annualized cost to borrow makes it a name worth monitoring. While currently inactive with zero trading volume, the underlying pressure on short positions is undeniable, waiting for a catalyst. Remember, education is your best tool in these markets. If you found this deep dive into BJDX insightful, please hit that like button, subscribe to the channel for more unique short squeeze analyses, and let us know in the comments if you have any questions or other hard to borrow stocks you want us to cover. We'll see you in the next video.